All right, hello everybody. This is Mike Rixey. I am the lead options instructor for Netpicks, and this is our options trade of the week. I'm going to go ahead and take a look at Roku today. We're going to talk about putting on a neutral to bearish position on Roku. Once I take a look at this new trade for this week, we are going to recap some of our open positions from previous weeks. I know some of you have been following along with this series that we've been producing, so I'll take a look at those open positions to let you know what needs to be done on some of those trades. But let's start out taking a look at our new trade for this week. It is on Roku, symbol ORKU. Roku has been one of the strongest names in the market here all year long. Even when we've had the few brief rounds of selling market-wide, Roku's been immune to that. We have not had any type of selling pressure at all. And in fact, just today, we hit a new all-time high. Over the last few months, Roku is up over 300%. It's been a phenomenal move. Well, that leaves us with an overbought condition. And you can see that down at the bottom, we've got our red and yellow histogram there. That's what we call our pulse indicator. When I start to see yellow bars, like we've had 4 out of the past 5 bars, it indicates that we're between a 1 and a 2 standard deviation channel move on the upside. That indicates a level where price action tends to stall out. We tend to see markets, when they get to these types of extremes, they tend to start slowing down. That pace, in this case to the upside, is not sustainable going forward. It does not mean Roku has to reverse immediately, but it does mean that going forward, we're most likely going to see more consolidation or even a small pullback. So I don't want to come in here and just buy long puts solely because Roku's overbought, expecting it to reverse lower. I want to put on more of a neutral to bearish position. Therefore, we're going to go ahead and sell a call spread on Roku. Selling a call spread is a bearish position. Ideally, we want the stock to move lower, but the beauty here is that if we move sideways, I make money. If I move slightly higher, we'll make money. Any type of a move lower, we can make money. The way that we're going to structure this trade is it's going to give us the ability to make money in 5 different types of market scenarios. The only move that would hurt us is a continued move higher, which we're not expecting because the market is so overbought. So let's go ahead and jump over to the trade page on Roku, and let's start to piece this trade together. Now, first things first, we have to decide what expiration cycle do we want to go with. The closer we get to expiration, the more aggressive the trade is. You've got to have a pretty strong directional outlook for that stock. The farther out in time that you go, it's a more conservative trade. It's going to take longer for that trade to develop in your favor, but it does give you the ability to be more patient just in case we're a little bit early on the trade. Now, in most cases, I like to look for between 20 and 40 days left to expiration. That's the sweet spot for my style of trading. I'm going to open up the September 27 weekly options. Those are the ones that have 21 days left to expiration. So go ahead and load those up here. The call options are on the left. The put options are on the right. And we're going to take a look at selling an out-of-the-money call spread. And I'm going to go to, with price action at 170, we're going to go to the 175 calls. I'm going to right-click on those 175 calls. I'm going to select sell, and I'm going to select vertical. That is going to pop up an order down at the bottom of the platform where I am selling the 175 call and then also buying the 177.5 call at the same time. Why am I doing both? By also buying the 177.5 call, it defines my risk. It limits the damage on a trade if it goes against me. If all I did is sell the 175 call, I'd have a far larger profit potential, but it also comes with a lot more risk as well. And in this type of a market, I don't want that additional risk. I would rather give up the home run profit potential in exchange for the smaller risk. Now, there's a $2.50 wide difference between the strikes, between the 177.5 and the 175 strikes. I want to collect between 30 and 40% of the width of those strikes. So I want to collect between 75 cents and $1 on this trade. Right now, you can see the price is kind of all over the place. We can collect 95 cents. Let's call it 95 cents here. If I get filled at 95 cents, that's $95 per spread that I am collecting up front. I'm collecting a credit to put this trade on. That is the most I can make on the trade. If I am perfectly right on this trade and Roku moves lower, the most I can make is $95 per spread. The most I can lose here is $155. And that $155, that is calculated by taking the difference between the strikes, $2.50 difference, which we just talked about. And we're going to subtract the 95 cent credit that I'm collecting to put the trade on. So you can see here, normally I'm looking for a risk 2 to make 1 scenario. We're actually slightly better than that here on this trade. I am risking more to make less, and the reason why I'm willing to accept that is because I've got 5 ways of making money on the trade. Notice my break-even point. It's at 175.95. That's the level that I need Roku to stay below. I don't care if it moves up, down, or sideways. As long as it stays below 175.95, I can make money. Right? So it gives me a lot of flexibility there on direction of the stock. I also make money from time decay adding up. Every day that passes, that helps me. And I make money if volatility decreases. There's my 5 ways of making money on the position. The whole goal is for this spread to get as cheap as possible so I can buy it back and book the difference. Book the difference between what I sold it for, right, and what I'm buying it back for to close out of the position. All right, so that is what we're looking for here on Roku. This is our trade of the week. We'll see what happens here over the next 21 days. The goal here, if I collect 95 cents, the goal is to buy this thing back when I can keep between 50 and 75% of that credit. So if I can buy this thing back for between 25 and 50 cents, that would be ideal. That'd be a good target zone for us. So it's a great, very forgiving trade. I love these types of trades in this type of market where we've got a lot of uncertainty, a lot of back and forth movement. These are the types of trades that are going to take the pressure off needing to be right. And what I mean there is if you buy a long call or a long put, it's the most aggressive options trade that you can make. You have to have that stock move in your favor quickly. It's the only way that you're going to make money. With this type of a position, yes, we give up the big profit potential, but now I give myself multiple ways of making money on the position. So this is a neutral to bearish position. We're going to make money faster if Roku moves to the downside. So ideally, if we can get it to fall out of bed here over the next week or two, that'd be great. If it doesn't, if we just kind of chop sideways, I can work with that. Right? I can work with that because the time decay is going to add up. But if we don't get a move lower, we're going to have to hold this position longer just so that time decay adds up in our favor enough. So this is our trade of the week, and we'll continue to track it here over the next few weeks and let you know how we're going to manage it. And we'll track it here again next week. Now, I mentioned we would take a look at some of our previous trades from the last few weeks and take a look at how they're doing. So let's start out with Pinterest. It's a symbol PINS. This is a trade that we put on back in early August. And we went out to the September monthly options. And we sold the 37.40 call spread. So let me go ahead and load this one up here. So we were selling the 37 call and buying the 40 call at the same time to make it a risk-defined trade. We collected 80 cents to put this trade on. It's now trading for 5 cents. We've basically achieved a full profit on this trade. You can go ahead and close this thing out, book the entire profit. You're gonna pay about 5 cents to close this position out, and any commission cost that your broker would require. But it's going to be a $75 profit per spread. Really, really nice position there. We tied up a couple $100 of capital, made an $80 profit on this thing. Really nice trade, and it just took the pressure off. We didn't need a big move lower. We actually got a big move lower, which helped us out, but we didn't need it. So really great position there. That trade is now done with, and we move on. So if you took the pins trade, congratulations. Really nice trade there, and we'll move on. The next one is on the Dow ETF, symbol DIA. And we actually put on an iron condor here. This was also back early August. And let me see if I've got it saved in here. I believe I do. And for this trade, we sold the 268-270 call spread and the 250-248 put spread. We collected $1.08 to put this trade on. It's trading for around $1.18. We're down about $10 per spread on this position. What do I want to have happen here? We need price action to stay between 250 and 268. Right now, price action's at 268.5. We're near the upper end of the boundary. I need this thing to be 50 cents lower at least over the next 14 days. Still very, very doable, especially given how overbought this market is right now. Going into the next couple of weeks, I think there's a very high likelihood that we do get a pullback. And that would put us right back on the dance floor. So nothing needs to be done. We'll take a closer look at it next week, see if we're able to potentially take it off for a profit next week. So if you've got the Dow trade on, continue to hold. Nothing needs to be done there. Netflix. is the next one up on the list. We actually came in, and this one's actually expiring today, so we need to talk about this one. We sold the 292.5, 290 put spread. This was a neutral to bullish position on Netflix. Netflix is one of the few names in this market that has not participated on the upside over the past week, unfortunately. We put this trade on initially for 77 cents. It's now trading for around $1.29. This one needs to be closed out today. It's most likely going to be closed out for a small loss. Okay, we were not right on the trade. Unfortunately, Netflix never bounced. It continues to move lower. We needed it above 292.5. It's now at 291, so about $1.50 below where we need it. So this one will end up being a small loss for us unless we get a big move higher this afternoon, which is possible, but just not probable. So we'll go ahead and close this thing out for a partial loss. We'll revisit Netflix going into next week. That could potentially be our new trade of the week, 'cause I still think there is a potential for a move to the upside. So Netflix will be a small loss. Target is the next one up on the list, and I believe I've got it saved in here as well. Got a big long list of saved orders in here, so let me find it. And there it is. So we went in and sold the 107.109 call spread, and we collected 68 cents. This one is also down money at this point. I need price action back below 107. We've got 14 days left on this trade. I need a $3 sell-off over the next 14 days. Is it possible? Yes, but we need some help. Target, along with a lot of the retail names in this market, are incredibly overbought. They've moved straight higher pretty much the entire year. Still very overbought, so the potential is there for a pullback, but we do need a move back down towards 107. We'll hold into next week. I'll take a closer look at it next week, let you know what we want to do. We may end up having to take it off for a small loss, but right now, nothing I need to do at the moment. We are down on this trade. Looking at my fill price, we're down about between $60 and $70 per spread, so we'll continue to hold Target. UAL, United Airlines. This is another one that we put on. This is actually one from, from last week. So this one is actually working out nicely for us. Haven't quite hit our profit target yet, but we're getting very, very close. Last time I checked today, we came in and we sold the 83.81 put spread, and we collected 51 cents. It's now trading for around between 23 and 24 cents. My target level on this thing, ideally, I want to buy it back for between 12 and 20 cents or so. So we're getting very, very close. I need price action to stay above 83. It's now at 86.5, so we've got a $3.50 cushion here. That's a pretty nice cushion. The time decay's helping us. If we can't close it out today, if we get any type of a higher open here first of next week, which is entirely possible because this market has been so strong, we should be able to close this thing out. So I've got my closing order working on UAL right now at 12 cents, and we'll wait and see what happens. I need one more push to the upside to be able to close this one out. So those are our open positions from the last couple weeks. Pinterest can be taken off. That one was a nice full winner. The other ones we can continue to hold into next week. I'll keep you posted there in our recap video next week. If you have any questions between now and then, feel free to post a comment here inside of the blog or inside of YouTube, or feel free to contact me directly. My direct email is mike@netpicks.com. So I'm going to go ahead and wrap this video up here. Enjoy your weekend, everybody, and I'll be back with you next week for our next trade of the week.